Welcome to the deep dive. You know, if you spend any time online scrolling through social media, it's kind of hard to miss. This whole narrative about immediate rewards, it's everywhere. You see the flashy cars, the designer stuff, these amazing vacations. It all screams success. Like right now, instantly. We're sort of conditioned to think that real success has to be loud and, immediate right out of the gate. But when you actually look at the businesses or even individuals who build something that lasts, something sustainable well, they're playing a totally different game, a much longer game. So our mission today is to kind of cut through that noise. We want to dig into this idea of long-term thinking, and we're going to use a really fascinating comparison to global e-commerce giants, Amazon and Alibaba, to see how these empires are really built.
Yeah, and the sources we're looking at, they really dig into why. Why having a clear, maybe even unpopular long-term vision, and coupling that with, frankly, huge investment in infrastructure. Why that consistently wins out over chasing quick, visible profits. So this deep dive, it's not really about the quarterly numbers everyone obsesses over. It's about understanding that strategic foundation, the bedrock that decides who's still standing strong 20 years later. We're going way beyond just the surface figures here.
Okay, so let's get into this because there's this financial paradox right at the heart of it. You've got Amazon, you've got Alibaba, both absolutely enormous in e-commerce globally. But for years, if you just looked at their main financial statements, they looked worlds apart. Honestly, if you were just focused on immediate profit, you probably would bet on the wrong horse. Big time.
Well,
let's paint the picture with some numbers from roughly a similar period. You had Alibaba reporting, about $9.9 billion in turnover?
Around that, yeah.
And they showed a really healthy profit, $1.1 billion net, which looks great on paper, right? High margins, sustainable, smart business.
Definitely looks solid, profitable.
Okay, now compare that to Amazon.
Yeah.
In the same sort of time frame, they're pulling in a massive $51 billion in turnover, like 5 times Alibaba's revenue.
Huge difference in scale, yeah.
But then you look at the net profit, only $1.6 billion. You kind of go, wait a second, 5 times the revenue, but barely any more actual profit. How does that even work? Why would a company making that much money look, almost inefficient on the profit line? It's puzzling.
Right, and that apparent inefficiency, that's actually the core of the strategy. It wasn't a bug, it was a feature, a deliberate competitive weapon. You see, Alibaba, their model was more about being a high-margin marketplace, very capital efficient, especially strong in China. They facilitated trade and, took their cut. They reported those nice profits.
Okay, standard profitable business approach.
Pretty much. But Amazon, under Jeff Bezos, they were playing a different game entirely. His vision, even back in 1997, wasn't just let's sell books online. It was way bigger. It was about building this globally scalable platform where they controlled pretty much the whole experience.
Yeah.
From clicking buy to the package arriving at your door. And even beyond that.
Yeah.
And to actually do that, they made a conscious choice. Sacrifice operating margin aggressively.
Yeah.
Basically pour every spare dollar back into building the machine, the infrastructure.
So that $51 billion in revenue.
Yeah.
We need to understand that almost all the money that could have been profit, the money that shareholders might have wanted as dividends, or that could have just sat on the balance sheet, it was immediately rerouted, pushed straight back into expansion. So what exactly were they building that cost so much that required sacrificing immediate cash flow like that?
They were building what you might call a competitive moat, but like a massive one, dug deep and wide. They reinvested constantly in technology, obviously, but also huge amounts in logistics networks, warehouses, fulfillment centers, stuff that Alibaba often relied on partners for, third parties.
Controlling the physical delivery part.
Exactly. But the real game changer, the truly massive bet, was AWS Amazon Web Services. Think about that for a second. They built arguably the world's best, most reliable cloud computing infrastructure, initially just to run their own relatively low-margin online store.
Just for themselves at first.
Right. And once they'd built this incredible, expensive thing, they realized, hey, wait, we can actually sell capacity on this thing to everyone else. So the retail side was almost like the justification, the cash-burning engine that funded the AWS infrastructure build-out. And then AWS itself became this incredibly high-margin foundational profit machine. It was like this hidden asset, subsidizing everything else and fueling relentless expansion.
And that's where it gets really fascinating for investors, right? Because the ones just looking at Amazon's thin retail profit margins probably thought, this doesn't look great. They wrote it off.
Many did. Yeah.
They completely missed the gigantic cloud infrastructure being built right under their noses. But the investors who got it, who understood the long game, the strategy of prioritizing growth and infrastructure over the immediate profit and loss statement,
Uh-huh.
they saw absolutely exponential returns down the road.
And it just perfectly highlights that difference in strategic sacrifice, doesn't it? Alibaba went for profitability, capital efficiency, good margins early on, which is, a perfectly valid and successful strategy.
Sustainable, yeah.
Yeah, totally.
Mm.
Amazon, though, went for dominance and infrastructure. They essentially said, look, we're going to delay our big payday for maybe a decade or more,
Mhm.
but when we get there, we'll own the roads, the trucks, the warehouses, the digital maps,
Mhm.
everything.
Mhm.
And making that kind of decision, that level of delayed gratification, that is incredibly hard, whether you're running a giant corporation or just, your own small business or even managing your personal finances.
Yeah, that really brings us to the core challenge for, well, for all of us, right? How do we overcome this constant pull towards short-term thinking? Because that discipline Amazon showed that willingness to sacrifice the now for future growth, it translates directly to our own lives, professionally and personally. It's just so easy, isn't it, to prioritize looking successful over actually building the foundation for success. You see it all the time. The business owner gets a good quarter, first thing they do, buy a fancy car.
Right. Instead of maybe better equipment or hiring someone great.
Exactly. Or, individuals who get a raise and immediately upgrade their apartment, their car, their whole lifestyle. Instead of maybe using that extra income to invest or pay down debt faster, it's all about that immediate visible validation.
Precisely. And our sources really highlight how this mindset, sometimes called profit extraction, just kills growth, especially for entrepreneurs. If you're constantly draining the profits for personal lifestyle things, which are usually liabilities or things that lose value,
Hmm.
you starve the business. There's no capital left for the important stuff. Research and development, smart marketing, upgrading your tech, it just suffocates the potential, and it leaves you totally exposed when competitors come along who are reinvesting, who are building that long-term advantage, like early Amazon did.
And on the personal side, the trap feels even more, I don't know, insidious. People end up living paycheck to paycheck, not necessarily because they don't earn enough, but because all their current money is going towards maintaining this expensive image.
Keeping up appearances.
Yeah, they're maximizing today's consumption. And in doing that, they completely miss out on arguably the most powerful force in finance, compounding.
Absolutely.
Because compounding doesn't just work for money, right?
Yeah.
It works on skills, on your network, on building a competitive edge. But you need to build the foundation first, the asset. Otherwise, there's nothing to compound.
That's the stark lesson from Amazon, really. Real, sustainable growth. It happens when you systematically choose future capacity over grabbing the immediate reward. So, okay, this is where we shift from just talking about it to actually doing something. We pulled out four actionable steps directly inspired by that Amazon model that you can use to start shifting your own mindset structurally today. Okay,
Yeah.
so number one, adopt the infrastructural mindset. When you get capital, whether that's profit from your business or just your salary, don't just think, what bills can I pay or what can I buy? Think like Bezos building AWS. Think about strategic capital allocation. Where can you channel that money back into things that give you leverage, that give nonlinear returns?
Like tools, maybe,
Or
or specialized training.
Yeah, exactly. Or systems that automate things, scale up what you can do. Focus on building assets that will ideally generate value years from now, maybe even with less of your direct effort.
Okay, that makes sense. And that leads right into the second point, I imagine.
It does. Number two, build compounding competitive advantage. The goal isn't just saving money in a bank account. It's about making your future self significantly more capable, more resilient than you are today.
So stop buying things that just go down in value. Liabilities.
Pretty much. Instead, focus on investing in actual assets. Things like stocks, maybe real estate, intellectual property, if that applies to you. Investment vehicles that have the potential to grow without needing your constant hour-for-hour work. The whole magic of compounding wealth is just reinvesting the returns back into the principal amount. It's like one of the most powerful yet simple economic forces out there. Then step three gets into the psychology, the emotional side. Institutionalize the delay of gratification.
Okay, what does that mean? Like, use willpower.
Well, willpower is great, but it runs out, right? Systems, on the other hand, can last. Think about Amazon's decision. It wasn't just Bezos waking up each quarter saying, maybe we won't take much profit this time. No. It became like an institutional rule. We will allocate X% of revenue straight into R&D and infrastructure, period, regardless of how well retail is doing.
Ah, okay. So it's about building the habit into your structure.
Exactly. corporately or personally. It means setting things up automatically. Like maybe a certain percentage of every paycheck goes directly into your investment account before you even see it, before you have a chance to spend it.
Removes the daily decision, the temptation.
Right, you build the system, then you just follow the system. It takes the emotion out of it. And then finally, number 4, invest in strategic knowledge. Knowledge isn't just something passive you collect. It's foundational capital. It's infrastructure for your brain, really.
So, learning about finance, investing.
Yeah, or market trends or new business strategies, whatever is relevant to your goals. Being informed allows you to spot opportunities others miss, like Bezos seeing the potential of cloud computing way before it was obvious. And it helps you avoid the common pitfalls, the mistakes everyone else makes. Basically, an educated decision you make today can pay off exponentially down the line because you're operating based on strategy, not just guesswork or luck.
It really does take a different kind of mindset, doesn't it? To look at Amazon's early numbers, that tiny profit margin on massive revenue, and see the potential for world domination instead of just seeing, a struggling business. Success, the kind that really lasts, it's almost never an overnight thing. It takes that vision, sure, but also incredible discipline. And maybe most importantly, that willingness to say no to the smaller immediate rewards
Mhm.
in order to build something truly massive, truly valuable later on. So the big takeaway seems clear. Real wealth, real power, it doesn't come from chasing the next shiny object or that instant validation. It comes from strategically, patiently investing in the underlying infrastructure, whether that's technology, skills, assets, knowledge that supports growth for decades.
Absolutely. It really boils down to that simple idea. The seeds you plant today, the capital and effort you allocate towards your future, that fundamentally dictates the harvest you'll reap tomorrow. It's the difference between fleeting success and building something truly enduring. So for you listening right now, maybe the question to ask is this. If Amazon poured its resources into AWS as its defining long-term infrastructure, what's the strategic infrastructure that you are investing in today for your own future self? Think about that. And commit to playing the long game.